Pete Najarian, you have been a stalwart defender of the financials, thick and thin.
It's been tough.
Is it going to get thick?
You know what? I think this is going to be helpful, I think, going forward. But I don't know if you'd want to put all your eggs in the idea of, hey, CCAR is just the answer for everything, because it's not. But it certainly is going to give the banks another reason, another catalyst for people to say, you know what? Maybe I will start putting allocations back into this sector that has not performed. It's underperformed by quite a bit, and it's been nothing. It's literally just been something where I'm holding on to Bank of America, I'm holding on to Citi, some of these names that I keep expecting to move to the upside that really have been failing. But in the meantime, I like the fundamental story, Mel, so because of that, I'm willing to hold on.
What is the fundamental story? Allie, what is the fundamental story for the financials? Because I feel like the fundamental story had been set up since the beginning of this year, and we haven't seen the stock price go up.
Right, no, you're absolutely right. I think the short-term noise that we've seen in the market about where we're going, disparate global growth, has really weighed on it, trade worries. But the fundamental story is that banks perform well when they have money to lend out, regulatory restrictions have laxed, and we have an increasing interest rate environment. The other thing is that we have a ton of M&A that's been dominating the headlines, and when you see that, you're going to see earnings go up. So we are there. We're buying on this weakness. Whether you do it through XLF, whether you do it through buying calls, we're absolutely a buyer here.
So we have 3 out of 4 of those things. I mean, we have rising rates, but the yield curve, we were sub 32 basis points. We hit 31 basis points. We're the thinnest spread since 2007. That has been a big problem for the financials.
It has been a lingering worry for the financials that this flattening yield curve could lead to recession, because that's one of the bellwethers. 9 of the last 13 times the yield curve's inverted, we've gone into recession. But I think when you look at the banks, the other thing you have to look at is they're really a tale of 2 banks. You have the domestic sort of regional banks, and then you have the big, what we used to call the money center banks. The regionals have tended to do, I think, looked a little bit stronger. I've liked them a lot better. I would probably buy JP Morgan in here. They haven't done well lately. I mean, I own it, but I probably add to those positions. And then you have to look at those who have been kind of the bad actors and see if it's ready, or if we're at time or not where you can still get involved with them again, meaning the Wells Fargos and how many accounts are going to get open at how many different banks, and if they cleaned out their, bad housekeeping.
Yeah, not that easy to clean up that bad housekeeping, though. I mean, it's been a lingering problem now for almost a year. Would you bet on an underdog, so to speak, like a Wells Fargo, Weiss?
Well, I think they're all underdogs at this point, right?
Well, they are. I mean, stock. Yeah.
No, I wouldn't bet on Wells Fargo because I won't get paid enough on the upside versus what I could get paid in B of A and Citi, which I own. I also own Visa and MasterCard. So, look, there seems to be like this rule that you have to own banks.
Everybody loves banks. Every single strategist we trot on here on CNBC, financials are the place to be. Financials are the place to be. We're overweight financials.
I can't wait to get out.
Here?
That's the truth, man. I can't wait to get out. And here's why.
You can just hit the button right now and get out.
Because right now they're way too cheap, number one. Number two, if I had another place to put my money, I would. But I'm sitting with cash, so I'm waiting for others to come down. And we'll talk about a stock that I bought a lot of this morning. But, there's this, if you remember those old Civil War movies where you lined up like there was one line, and there was another line standing behind it, then another line standing behind that.
Steve led the charge.
Jim, welcome here on time. And so, see, Jim doesn't mind owning financials because as a sub-commander, he's used to being underwater.
That's just wrong.
So here's what I'm saying. So all these people keep lining up. They keep getting shot. And one line goes down, another line, financial buyers comes in, they get shot. So I'm holding it because, as I said, I have no further place to put money. They are cheap, and they will rally at one point. And that's where I'll get out because I think I can make more money elsewhere.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.